Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. So, yesterday has happened the last event that was expected by most investors about the decision of the Federal Reserve about new program of the quantitative easing, the third program. This program was accepted. It suggests 40 billion purchases of mortgage-backed securities on the open market. But all in all, this is not so important. The important that Fed intends to inject more money in the financial system. Although I was flat since the beginning of the week mostly, and I've told you that I will stand aside till there will be some clarification on the market, because too many emotions currently on the market. There is no calm and reasonable behavior, and mostly this current move is due to emotions and the appearance and announce of the event that was expected by most market participants. But currently should follow some sort of the calmer period in the market behavior, since all major events that were expected were released. Now I'm telling about the European Central Bank some sort of the quantitative easing, FOMC quantitative easing, and so on. And if you know, I previously told that personally I didn't believe that FOMC, Federal Reserve, will start the new quantitative easing program. And the reason for that is Federal Reserve already has injected about $2.3 trillion in the economy within the 2-year period. Yes, they hold interest rates at low rates. They create about 2 million jobs in the United States. But what has happened when Fed shut down the print? Economy couldn't support itself. Economy couldn't progress and couldn't show the improvement as in production, in the sales, in all parts of the gross domestic products. Economy couldn't create the new jobs without Fed support. That tells that probably the quantitative easing is not sufficient tool for economy stimulation. That's the first reason why I doubted the possibility and look at this suspicion on the possibility that Fed will start the quantitative easing again. The second moment is that Fed has the risk to meet unknown risk of taking the quantitative easing program, because they issued, as I said, just a tremendous amount of money in the economy, but they do not know the risks of that they could meet in the future. What sort of inflation it will be? That's the question. And personally, I do not know, will you agree with me or not, but in starting of this quantitative easing program, I see some sort of the political event, because, as you know, on the November 6th there will be elections in the United States, and on the eve of the elections the government usually, as a rule, always creates some positive sentiment on the markets, since a lot of Americans invest in the equities and other assets. So usually, as you know, the stock market usually is growing on the eve of events in the United States. maybe this starting of the quantitative easing was partially triggered by this moment. I do not know exactly, but totally exclude this moment is also, I think, not quite wise. So in fact, currently on the market is some sort of the doom and gloom, and as I said, I will stand with my trading plan. My trading plan is based on the technical picture, as we discussed as well yesterday. As you can see, market has passed through this 127 extension of that swing to the downside. Again, it continues to creep with the overbought condition, and market has entered in the monthly confluence resistance area. So it has started right from this area, and the upper border, at least on the numbers of the Fibonacci extension, stands around 130 area. So that is an area of confluence resistance on the monthly chart. That is also the daily overbought. The next target stands slightly higher of the monthly confluence resistance 131.80, this 1618 extension of that swing. So based on the odds, since the technical analysis is mostly dealing with the odds, some respect of this area should happen. If it will happen at all, of course, because as I said earlier, I have seen a lot of times, many times, when the market just thrusting through the confluence resistance without any respect. That is usually will give us the confirmation that it's really a strong market. But in most cases, according to probabilities, there is some respect should happen. Maybe it will be not so significant. Maybe it will be shallow respect, but it should come. And any respect of the monthly confluence resistance usually should start by some bearish pattern on the daily time frame. That is what I will expect. Even if there will not be any confluence resistance area, even in this case, I will not enter on the long side with the market, because market at overbought. And anyway, I will wait for some dip to buy before I intend to enter on the long side of the market. So what we could get in the nearest future on the daily time frame? First of all, the weekend will be very useful, because investors will have the possibility to reassess the current situation, because it's not very simple currently. It's very difficult to foresee any development on such kind of market concerning about the euro and US dollar. And in the long-term perspective, I think that personally I will try to look at other currencies, since I mentioned some fun. Well, I do not like the situation in the Eurozone, and I do not like the situation in the United States. And such currencies as Australian dollar, maybe Swiss franc, looks much more suitable for long-term investment into the assets that is nominated in that currencies, because this is very mostly more calm situation with these currencies. Now the situation on the euro US dollar pair reminds me some currency boards, since this is really the amount of the money will increase significantly as on the euro as on the US dollar, but the rate could stand in some sort of the same area, because as on the one side as on the other side there are a lot of injections in the financial system, but the value of both currencies could reduce due to disproportions among the other currencies, such as Swiss franc, as I said, and maybe Australian dollar, maybe some other currencies. That is what worrying me in the long-term perspective. But currently, as I said, I do not want to enter long right now. Probably I will wait for some, at least for some dip, if I intend to enter on the long side of the market, and if I suggest that there is no confluence resistance right here. But in current environment, and as I said, I expect some deeper appreciation, deeper respect of this confluence resistance by some significant retracement to the downside. Well, One of the patterns that we could get in EURUSD future could be some directional patterns of the Napoli. That could be the bread and butter buy, since this is acceptable for us on the daily time frame to deal with the bread and butters. Okay, that is a continuation pattern. Another sort of the pattern that could be the double repo sell, because that is significant number of bars here. The thrust is not impressive, but still this is enough to trade the double repo pattern if it will appear. That really could happen. I'm telling about these patterns because they demand not much bars to appear, because if we will deal with another patterns, they will need some more time to appear. On the lower time frames, I did not see any significant patterns. All that I could say that all trends bullish, of course. On the hourly time frame, we see some sort of the very steep parallel channel that developing to the upside. Maybe we will see some lower time frame patterns. Maybe double repo will be combined with a butterfly sale on the hourly time frame. Who knows? That could be. But my trading plan is still the same. Well, I think that the current move to the upside has mostly emotional basis rather than some fundamental foundation. Of course, it presents as well, but it should be a bit not so tremendous. Well, that's why, speaking the technical picture, we had resistance, significant resistance, and we had daily overbought. So in such circumstances, I'd suggest retracement. And that what I will be particularly wait for on the euro currency.